What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock and what you should be looking after for the future. I'm also going to break down what's going on with the overall market and how this may affect NIO and what sense you should really look out for in comparison to 2008. Now, before I break anything down, before I talk about what could happen to NIO's share price, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire NEO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free NEO share, a free Tesla share, or a mix of all of them. With that out of the way, let's get on with the video. So, looking at some statistics, we know that the average bear market shows a 35% drop in the market, and currently in this current bear market, we're down about 24% from the all-time high. So we still have a long way to go before we actually see the absolute bottom given historical data. Now, the market is not necessarily obligated to just repeat itself over and over again exactly the same way. But if you look at it from a historical basis, on average, the bear market for the S&P 500 or the SPY, it's about 35% over 14 months, sometimes even 16 months. So this would basically show a very, very strong probability that we could actually see the SPY come down pretty hard, and we could actually even see more downside from here. So one of the key metrics we could use to actually measure this and actually tell what's going on is to use the VIX. And if you don't know what the VIX is, let me just give you a very quick summary. The CBOE Volatility Index, or the VIX, it's a real-time market index that represents the market's expectations for volatility over the coming 30 days. Now, it measures the risk, the fear, or stress in the markets. And also, it's important to note that when the VIX goes up, this is when the market drops. When the market tends to drop, this is when the VIX goes up. So they're inversely correlated. Now, looking at the data, there is something that's a little bit scary. If you look at these two comparisons of the VIX right here, this chart right here is the VIX during the 2008 big crash we got. And this is the VIX right here going into like right now. You will notice that there are some similarities. Now, please note, just because there are similarities doesn't guarantee it's going to happen the same way, but it's definitely like a red flag you should be very well aware of. So we have this like first top up here come down in a very similar fashion in the first blue rectangle, but then we do get another push up again during this one. We didn't actually get this before. So there is a difference and there is a lot more volatility in this market than before. Then finally, we got like another push up followed by a big drop. Kind of similar to this, not exactly the same though, but we do have kind of like this double spike, just like this. Then we form these like double tops here. This is almost forming an inverse George W, similar to this, followed by a big drop, a big push up, and one last drop to come before, the big crash comes. Now, the thing is, we can't guarantee that it's going to happen like this, but there is something else that's very important. Not only is this very similar to 2008, but there are similar circumstances. And also, something to note about the VIX is when you look at the weekly, please ignore these rectangles, by the way. If you look at the weekly on the VIX, you will notice for the last couple of decades, every single major market crash, when it happened, the VIX goes above 45. From 2008, 2011, we saw it, 2012. We also saw this happening in 2015, 2018 when the market dropped, during the flash crash from 2020. You know what happened? Now, where are we? Since that day, the market had been rallying and rallying, and now the VIX is currently at like 31. So we're not even close to 45 yet. That's a sign that there might be a lot more downside to come in this market, especially considering that on average, the market goes down 35% and we're only at 24%. So those are signs that the overall market may see some more red going forward. Other big red flags out there are the fact that the hedge funds are shorting the markets at record levels. This could lead to a squeeze, but before a squeeze happens, before a lot of these like small caps start to squeeze, there could be more downside again. And it's very important to note they obviously know something. Going back right here, the Credit Suisse credit default swaps spiked again today to an all-time high. This is for Credit Suisse, also for UBS, the same thing is happening. This just means that each of these credit default swaps are just being used kind of like insurance for a lot of these lenders. So there is a risk that they may not be able to pay out their loans, and that's why these swaps are being purchased. When they go up like this, all it means is that there's a lot of risk. There's a risk that big banks are going to have to default on their debt. It's becoming more difficult for them. And this is in part due to the high interest rates and also the slowdown in demand. So all these things are really affecting them, similar to 2008. So what does this mean for NIO and the markets? Well, the market could have a big hit, guys. We could see the SPY come down to the low 300s. It is still very possible. And if that's the case, one thing worth noting is the fact that NIO has a tendency of following the overall market. Now, in one of my previous videos from like 2 weeks ago, I showed you guys these two Wyckoff accumulation schematics. We have version 1 and version 2. So right here, let's start off with like version 2. If NIO truly made a bottom, all right, we appear to be like around phase C, I'd say. If that's the case, NIO would not make a new bottom and it would start to run up if we are following the first schematic right here. We made a big drop in phase B, but we are still set for a new bottom, which is where the spring comes in phase C. So we are appearing to be entering phase C. If NIO gets a nice bounce off like $12, 12 to 13 bucks, which I've been talking about this range for so many weeks. If we get a nice bounce, we could push up and see a big recovery from here. This could be the absolute bottom for NIO. But if NIO starts to retest, if we get a break around like the low 12s and we continue to show some signs of downside without signs of reversal, it's very possible the spring phase could bring NIO even lower and this thing could go to 10. Now, I know you don't like to hear that, and I'm not guaranteeing that yet, but it is a possibility. And we all have to be very prepared for this because it's not NIO's fault. It's not because NIO is a bad company or anything like that. NIO is a great company. They're very strong. I'm very bullish for the company long term. It's just that the overall market will have an effect on this company, no matter how great they are. Companies like Tesla and Apple, they're all taking hits right now. This is what happens during a recession. This is what happens during these big financial pullbacks. So, with that said, we'll have to wait and see how this goes for NIO. But it is very possible if this thing does not hold the 13 level, we could start testing that, I would say that mid $11 to $12 range, get a break below 12. Very possible this thing goes back down to about $10 a share. All right, so be prepared for that. Watch the zones carefully. We don't know yet, so it's not necessarily guaranteed. But if the market crashes, which it probably will, this will not look the best for NIO. All right, so more downside could come. I'm not scared and I'm not worried about that because once again, it's a blessing in disguise. Another opportunity to buy this stock like crazy because look at what happened when NIO touched 11 bucks. It pushed all the way up to about 24 within like what, like 2 months it happened super fast. We know this thing could push back to the 20s and 30s and 40s super fast when the market improves. We're not ready yet for the market to recover. So, to me, once again, a very, very good buying opportunity. With that said, thank you all for listening. All right, please have a great rest of the day. Please enjoy the rest of your weekend. And I do believe great buying opportunities are here, not financial advice, by the way, and big things are still to come. Note NIO is still a great company fundamentally from their German expansion to expanding around the world to key deliveries. I'm still very bullish regardless of this for the long term. NIO to the moon because the long term future is bright, and peace out.